Hello, my YouTube friends. My name is Adam Kahn, and this is my Dividend Retirement Journey. I hope everybody's having a really good Friday. I know the markets got beat up a little bit, but overall, despite how scary it looks, like at least what I found, is it hasn't been that big a move, but the markets seem really nervous. Stick around. Today's going to be a great video. I'm going to talk about two stocks that I think are going to be my next purchases, along with what I hate about real estate and what I love about the equity markets. Now, before I even get into the next two stock purchases I plan to make, as always, keep in mind nothing in these videos is financial advice. I am not a professional financial advisor. You guys need to do your own research when making the decisions for your accounts. Potentially even reach out to a professional financial advisor. And I know, I yap about that stuff, but understand I take it really seriously, primarily because my life is just like my life and yours is yours, and things need to be made specifically to everybody's unique situation of what fits them. I know I overkill on it, but it makes a lot of sense. And before one makes an investment, they really need to think about what their goal of that investment is. I know that sounds so stupid, right? I mean, we all hope that it makes more money. But the reality is, like, for me personally, it's a little bit different. I'm not looking to outperform the markets anymore. I've gotten to a stage where I'm looking for a little bit more protection, and I want to have some income coming in. And that is not the same for everybody. Now, I know some of the people who've made in the comments some of the things they like is that's kind of the direction they are going in their lives. So it fits similar personalities and similar things that we're looking at. But I also think we'll still be in different spots. That's why I say it's so important that really you do your own research and everything else. So real quick, what are the two stocks that I'm thinking about? And one is actually a specific stock. The other one is a general, what's the word? I get brain farts, and I leave these bloopers in. But it's a general sector that I'm aiming for. So the first one is PFFA. I've talked about it in other videos. Some people hate it because it's got a high fee for what they charge to run the fund. But they invest in basically private issue stocks, and they pay a monthly dividend. And I think it's a really nice thing to match the portfolio that I'm building. Now, the negative is because all stocks have positives and negatives and whatever else. The positive is it pays close to a 10% yield. I think it's like 9 point something. The negative is it likely is not going to grow over time. Like, you're not going to see real appreciation. But for somebody like me who's getting into retirement, who just wants the income, it fits what I'm looking for. Again, why everybody needs to do their research. Like, it fits me. That doesn't mean it fits you. And I think it's like the Virtus InfraCap Fund is the name of the company or the fund that's driving the ETF. And their expense ratio, I forget. But people point it out all the time. It's like, I'm making it up. I'd have to look it up, but maybe it's 2.75%. And some people get really uptight about that. And I got to tell you, it makes no difference to me what a company is making if I'm making enough on that investment. I do not get jealous of them. I do not care. The other thing is that legitimately goes to some of their expenses. It is not just straight profit. But if I can make 10% return and get monthly dividends, do I really care what they're charging to help me get to that spot? Like, they're doing me a favor by creating this fund that gives me the benefit that I want out of it. If they're profitable as well, like, that's a great thing because that means it sticks around. Now, the main thing that I like about PFFA is that I've had it for close to 5 years. So it makes me comfortable that they've been around. They've been around a little bit longer than I've had it. I've continued to get those payments, so it makes me really comfortable. I have not bought it in the set it and forget it account. I haven't made it part of that longer term goal of where I want to be in terms of income coming in, but I've had it in and out over the years. It's in my son's account of all things, despite the fact that I think he's got so much time to grow, because my concept with him when we bought it was you have a little bit of income coming in every month that you can think of that as your allowance, and you can use that money. Now, the funny thing is, he's never really paid attention to it, so I just put it in dividend reinvestment. But I thought it would be a really good thing for him to learn, like, there are different things to invest in. Some things you can use for income to try to supplement the money you make, and then other things you hope to have growth out of. The reality is, with his age, it's kind of silly for me to leave it there, but I like the company. I like what they do. I like those monthly distributions. And if he ever gets to a point that he wants to be able to use it, it's available. The other stock or sector, as I prepared you for, that I want to add to my set it and forget it dividend retirement account is the midstream oil companies. Similar to PFFA and not necessarily monthly distributors, they pay nice, healthy dividends. I don't see a ton of growth in that industry. They're not really impacted by oil prices or anything else, but you can find ones paying probably as little as a 3% yield. And then I think some of them, a friend of mine pointed one out. I forgive if, oh boy, I should look up the ticker symbol. Hold on a second. I'm going to go see what the ticker symbol is. I can't believe I forgot the ticker symbol because I was making fun of it. It's actually MNR. I was talking about it as if it was manure, but it pays like a 14.7% yield. Now, my guess is that the yield fluctuates based on how much income they have coming in. I'm not sure. This is a new one that was pointed out to me. I really just bought a tiny bit to put it on my screen to pay attention to it. But that's one I might add to the dividend account. And if I did, since they're paying such a high yield, that always makes me nervous, like they're doing something to take more risk. For the most part, as somebody who deals in lending and finance and other stuff, the higher the interest rate, the more risk that's being taken. Now, I do not know what's going on specifically with MNR. Like, maybe I'm wrong and it's just like the baby with the bathwater, and maybe something's happened where the stock price is falling, driving that yield up through the roof, and everything is just fine. But maybe they take on some risk that I actually wouldn't want to take. And I wouldn't want to put a really large percentage of my portfolio into something that's taking on risk, because as I mentioned earlier, I'm more worried about protection than I am growth or making too much money and taking on that type of risk. So I become very hesitant when I see something paying that high a yield. But to be fair, I can take a very small percentage of the portfolio and add it into a couple of those things if in total I'm not spending more than 3% of my entire investment portfolio to push those yields higher and try to get a better return for those dividends. You know, it's a risk that I'm willing to take to try to drive the overall percentage a little bit higher to get to my goal of keeping it between 4 and 6% total. That allows me to own some of the things that pay a lower dividend yield and might have some potential growth with it. I know that's a whole lot of information all at once. I hope it wasn't too confusing, but I'm thinking most of you understand. You know, it's kind of funny too, because even as I give those two stocks, I have no plan to buy them anytime soon. Currently, I don't see any of the stocks of my growth portion that are getting to the levels where I'm looking to sell them. I've been selling calls against them, and my attitude is this could take anywhere from 3, maybe even 5 years, but I suppose it could take longer. It's more of a work in process, and if the stocks get taken and exercised, it will free up some cash to buy a dividend company. In the meantime, just my own personal anxiousness, if I want both to happen at the same time, I keep looking and trying to find things to buy. The funny thing is, by the time that I get taken on those options, it is quite possible that the price of the stocks that I want to buy has changed, no longer making it attractive, and I'll just have to find new things. So in some ways, I should just be more patient. But I did want to talk about why I hate real estate and I like equities more. Basically, years ago, the math made much more sense to me in terms of properties. Now, don't get me wrong, because I talked about that in my live. I do not see any big crash coming in real estate. I think the real estate market is just fine. It's just as I get towards retirement, the headaches that come along with real estate and the reality of the growth rate is it grows slower than the equity markets, and it's much more headaches. For example, now I help my in-laws out with a property of theirs. I have a rental property of my own, If I could, I would get rid of all of it and put it straight in the stock market and deal with the fluctuations of the stock market. Why? Unless you're leveraged, I don't really see the value of investing in real estate. And at this stage of my life, I really want less leverage, not more. To me, the real advantage of real estate is if you're buying an investment property, putting only 25% down, dealing with the payment, and then the fact is you're getting 4-to-1 on your money. And what do I mean by that? So you buy a house for $400,000, put $100,000 down to put down 25%. Now, it's very simplified. That's not the reality. There's some closing costs. There's some other things, but let's just stick with that for now. Your payment is based off of the $300,000 loan, and you hope to have enough income coming in to be able to cover your mortgage payment and any HOAs and things like that. If the property goes up 2%, right? It's not a whole ton. Real estate doesn't move the way typically that it has the past few years or during COVID. Generally, it averages between 2 and 3% appreciation year in and year out. Not very exciting, but it's on the full value of the property. So let's use the lower number, the 2% on a $400,000 home. That means it's gone up $8,000. Since you've only put up $100,000, you've actually gotten an 8% return. If you're making a little bit more on the on the rent, well, you're pushing that 8% return even higher. And then as it continues, similar to stocks, that compounds over years. But why do I not like it then? The problem is between the tenants and the property, there are problems. I joke with my buddy that Pfizer has never called me and told me that an air conditioner broke and I need to come fix it. And you add in something like every now and then, in fact, my in-laws' property this year needed a new air conditioner unit. And the cost of an air conditioner against the money that you're making on a rent is really not anything that you're going to make back in a short amount of time. It takes a very long time for that money to actually be made back off of the rents. And in the meantime, you still have your taxes. If there's an HOA, you're going to have that. And then other typical repairs as well. I have yet to have a year where there were no headaches on any of the properties. Then you have tenants leave and you have a dead time where you have to go in and paint and clean it up a bit. And then you have to put it on the market again before it gets rented. Now, we are very fortunate. The property of mine, I feel like the renter that I have now, he seems great. He's taking good care of the property. Same with the one that's my in-laws' property. They seem phenomenal and no headaches there. Now, I have never raised the rent on the one of my in-laws' property because they take such nice care of it. And same thing with mine, which means we are going to get under market rent. But I've learned from experience the value of a good tenant because we've had bad ones too. A while back, one of the tenants damaged the walls, damaged the doors. Like they really beat up my in-laws' house. It sounds like she and her boyfriend were having fights, and when we got in there was a good amount of damage. So I'm so appreciative to have the good tenants. If we're getting under market rents, and I mean significantly in one of them, that's okay because the ones in there now, like they updated the flags, so like they really take care of the house. And the one that's in my rental, man, he's awesome. Either way, super appreciative. I don't mind if we're not getting the proper rents for the homes to have those tenants in there. But something like an air conditioner or a water heater or things that break are still my responsibility, causing the percentage return to drop. And I don't want leverage, so I hurt myself in terms of the real value of real estate. You then flip to equities, and there are plenty of equities paying a good dividend yield right now that money, in my mind, would get better return in the dividend than the rents that we're getting on the properties, and you don't have that headache. Like, they're just not that profitable, rents versus the price of the homes. And maybe that is unique to Las Vegas, but I think with the price increase that we've seen in real estate, It's not necessarily just unique to Vegas, and I would way rather be in a stock that I don't have to worry about what's going on at the company. I don't have these time frames where, oh geez, these people left, so we just have no income coming in, and you got to come over and get it painted and cleaned up and everything else. There's so much less work, and as I get closer and closer to retirement, it's just one less thing to have to worry about, because what I want to focus on, the reason I'm doing this stuff, I want to spend time with my wife and son and travel and have lunch and hang out. And even if it's just sit and hang out and watch TV, that's what I want to spend my time doing. And to be fair, it's also why I do the YouTubes. So you guys understand, I do this because I really like to. No other reason. I started the new channel because when I did the first one, I had this goal of making it big, growing it, and whatever else. And I was on that pace. You guys have seen I have a lot more followers. Something happened with the algorithm that was weird and the views fell off. But what I recognize is I like the beginning time. I like the people I got to know. And I just want to have a little community of the people who watch my channel and appreciate it. And we can have discussions back and forth in the comment section. And to me, that's super cool. It gives me something to do. I don't want to do nothing. I think people who do nothing fall into this rut of like, what do I do with my time? I try to stay busy. I just don't want to have the pressure of what comes with work. I would, like the other day, I know I said I might do it. It was way cool. What did I do? I got up, I went for my walk. My walk took me to one of the casinos that has a bowling alley there that does during Monday through Friday, 3 games for $7.50 if you're over 50. So I went and bowled. I haven't done that since I was a kid, and it was super fun. Then I walked back. I got about 4 miles walking in. I got to throw a ball down the lane a little bit, and I still found time to go do a YouTube and post it and everything else. So it's not like it's because it keeps me busy. It lets me talk about the stuff I really enjoy, and I guess that's it. So you guys get that for free. As much as I joked the other day, I am not selling my Qualtron or my Discord or sign up for my course or whatever else. I'll tell you what, one of my favorite YouTube started selling his own platform, and I can't even really watch the channel anymore because he talks about it incessantly, and I really like the channel. I just don't want to hear it. Like, great, you put on some calculator that makes people feel better about the things they're buying. But you know what? They can find it in other places. It's easy enough. I'm happy to support people because I think it's entertainment and they deserve to make money. I just don't want to hear about it nonstop. I'd almost rather a commercial and then it move on. Anyway, that's just my own rant. So I don't know. What do you guys think? Do you like real estate? Do you like equities? Do you like them both? Would you rather own real estate and manage it? Because the other thing is, I really didn't want to hand real estate down to my son because, like, he has his own interests. Just because I like what I like doesn't really mean that he may like the same things. It would be cool, but you know what? It's cool what he enjoys as well. Anyway, enjoy your Friday. As always, this Tuesday, 11 a.m. Pacific time. I get it. I know this time sucks for a lot of people, but it just fits my schedule, and I apologize for being so I don't know, such a pain in the ass and needing it to fit my schedule. I actually would like over time to add more lives because I really enjoy the platform. I love that people can kind of chime in right there and then, and I kind of encourage it. And I encourage you guys to comment in the comment section. I'm sure you see I respond to everybody. And like I said, I enjoy this stuff. It gives me something to do. Anyway, have a great weekend. Hopefully at 11 o'clock Tuesday Pacific time, you're able to make the live. It's pretty cool. Last week, I was excited to have some people show and ask some questions, so hopefully you guys can make it. Have a great Friday. If I have time to do another video, which I don't think I will because, you know, tomorrow is snowboarding. Sunday, we have a friend's birthday, so I don't think we'll have time, but Monday I'll chime in, and then Tuesday the live. Have a great weekend, and I'll talk to you guys soon. Bye-bye now.